Good morning, everyone. Good afternoon to those of you who are here in the UK and in Europe. How's everybody doing this morning? What's up, Jim? How are we doing? What's up, Jiraj? Well, this is one of the quietest Globex sessions we've had in a long time. I have not taken any trades today. So far, it's been pretty slow. Yeah, I've kind of been loading you guys up with information. Really want you folks to start thinking about the streams, thinking about execution. Um, this is the time of the year where you should be breaking down your trading, what you need to work on, what you did well, what you can improve on, how you can improve on the things that you did well, fix the things that you didn't do well, you know. Hey, Mr. Simpson, I hope you're on your meds this morning. Let's try and keep the chat. Try and behave yourself, okay? Much appreciated. And the folks in the room appreciate it as well. What's up, Al? How you doing? Yeah, it's slow, man. Overnight inventory, well, it's kind of mixed now. We've got, it was short, it's corrected up, but boy, the correction has been slow. They're selling this thing every tick. There's a seller. Now, I'm looking at the upper structure here, and I think we're going to have this 68.84 level. That's where a lot of the really big stops are. That's going to be the next level of interest. If we can get above 68.74 and a quarter. Okay. We keep making poor highs, but every time we retrace, see, this is one of the hardest types of pre-market because inventory is short. It's correcting upwards slowly. The pace of the correction is insanely slow, so everybody's shorting it. Now, if I'm right and everybody got short in cost basis, if there's a lot of short position between 68.70 and 68, no, not 68.70, what am I doing? 68.63, right? The value area, low area. If between 63 and 70, if you get enough people trapped short here, when they go to cover, they'll yank the supply. Right? That'll happen, right? And that's why If we run yesterday's high, that's going to run some stops and we're going to creep up above 74. So let's see if that happens. We're at 72 and a half right now, right? Taking that overnight high and we're driving it higher. And the overnight point of control has moved up from 63 up to 68. Okay, so a little bit of distribution. Not much, but hey, listen, 5 points on 1,000 contracts, right? That'll buy you a few Christmas gifts. Well, depending on how rich your taste is. There's a lot of stops up here. All right, so what we need to do is just go with. Remember, if we get above 68, 74, 76, all of the short-term inventory is underneath us. Right? So if you watch my morning video, and if you're not a consistently profitable trader, I highly suggest you watch my morning video because I explain how support is created. I explain why resistance. You guys do trade support and resistance, right? You might as well know why they exist. Right? Support is created by unfilled buy orders. Unfilled buy orders are put in by short sellers who are trying to cover. And they're always the first to buy a market. They're always the first, right? They're always in line, number one, in there, right? Trying to buy back what they sold, especially if they have to buy size. They're not going to wait, right? You guys like to wait for your, you have your fantasy targets, and you will wait for them even if the trade is going against you. Wholesalers are like, nah, right? Any size trader, right, has to operate and live in reality, right? If you don't, you're going to be a bankrupt size trader. Know what I mean, Jelly Bean? Right? It's very simple. You don't price your inventory properly. Think about it. You're a trader. Do you know what a trader is? It's just somebody who moves inventory. That's all. Right? You just try and make money from the movement of other people who are creators. You buy a little, sell a little, short a little, buy it back. Right? It's not rocket science, but it is a lot of work. So, what is the most important thing in trading? Say I was a trader and I'm trading coffee. Well, I'd like to know where my inventory is priced. Because if you don't know where your inventory is priced, how are you going to make good business decisions? This is what I was talking about. See how we got above the previous day high? Now we've got a stop run. You guys would call that a breakout. Okay? So we are breaking out. There is a set of stops up here. And I've drawn the stops in from all the upper levels that we are at. So we've got stops. If I split out these profiles, there's stops here at 80. There's stops here above. And this shows you where all the upper stops are. And that is a very useful thing in market profile. You'll find that these markets will slow down where the stops are. Okay? Now, let us see if we can stay above the previous day high. Now, what might happen, because it's a bit of a slow day, is we might go back and forth between yesterday's high and this overnight high and try and get rid of this inventory up here for profit. Okay? So you're trading, right? If you're not long, position long here, you're happy you're selling it here, right? But to initiate a trade now, let's see. I'd love a look above and fail of 83. That would be beautiful, right? If you are shorting it here, right? Oh, no, I didn't. Hang on one sec. There we go. There we go. Okay. And good morning to the folks that are joining us on YouTube. Hope everyone's doing well. Man, it feels like a Friday. Now, yesterday, Globex was a little slow. And then RTH opened and we got buck wild, right? Just it started jumping up and down all over the place. So let's see if that happens today. We're going to have some forced short coverage. So remember the buying that we get up here. These are people who don't really want to buy, right? They really don't want to buy this. They took that stop. That creates a little bit more buying. On retrace, I would be looking at this 76 area right here. I think it will bid there if we retrace. Let's see. The problem is with a longer term short situation is we don't have a lot of inventory above us. Thanks, Raj. Thanks for listening. This market, boy, it's been challenging to trade this market. There's no gimme trades, there's no freebies. There's some decent trades, but man, it makes you work for them. uh, yeah, it's good to see you, Mark. Let's see. We just, and this is the worst kind of price action to short, right? Because it's that slow, creepy price action. They've got all the supply underneath 68.70. So they could sell it at 76, they could sell it at 80. But remember what I said, if we get enough people trapped short under 70, look what's happening. Nothing wrong with shorting. Look for a seller. Okay? You always, as a short seller, right? We're going to open on a gap, just so you know, which is that's another problem because then we're going to have a short position between 73 and where we open. So, which is a pain, a total pain, right? So wherever we open, we're going to have a gap up. And didn't I say a couple of days ago that if this goofy thing, see what we were supposed to do is we were supposed to go sideways and then liquidate, right? We were supposed to go up, sideways, liquidate. But here's what happened. We went sideways and the lows got higher. That gap didn't fill. That price stability, people started buying. And when people come in, what do you do as a wholesaler? You got to raise price, right? Because you're not an idiot, right? You didn't just fall off the turnip truck. So you got to raise price. You got to raise price, right? You have to maximize your profits. That's what's going on right now. Let's see if that holds. Oh, look, we got a sell order. Let's see if that, remember I said 76? Let's see if there's some bids at 76. Let's go draw a line there. Hey, J55, good morning. Hey, AO, how are you doing? Naruto, what's going on? So how did I know that there was going to be support at 76? Because I'm looking at the 1 minute candles. And on that move up, as soon as it broke 76, do you notice that it couldn't come back and trade at 76 here? It might now. Now we might have enough inventory to force the sellers to sell under 76. If not, that offer is going to lift and we'll be back at 78, 79 before no time. Watch. Now, how do we use this information? Well, say you're short at 79.80 and you get down to that 76 area and you put a buy order at 76 and a quarter and it does not get filled. Wholesalers are always liquidating. JK, it's whether they can liquidate at a higher price. If you've got 1,000 pieces of something for sale and you've got a lineup, say you're working at a flea market and you're selling fake Rolexes, and there's a lineup to buy your fake Rolexes. There you go. You got price stability. Now there we go. Let's see if we can get under 76. Right? We're 76 quarter, quarter half, quarter half, quarter bid, half offered. Boom! There's the print. See how it took a couple of minutes before we could actually break through 76. The reason is they didn't have to sell until now. Why do they have to sell? Because they jammed people long at 77 who are trying to get out. 78, 79. They're not happy, they're selling. So it is your job as a wholesaler, if I see that Raj is selling 77, I'm going to sell 76. He'll go to 75, I'll hit the 74s. He'll go 74, I'll hit 73. Before you know it, I'll buy it back from him at 70. My cost basis is 69, 68. I'm still making money selling it down to 68. I sold it to him at 79. I buy it back at 70, rip it back up to 74, and sell it to some other new person. The ES market, the NQ market, these futures markets, they're for speculation and they're for hedging. So you're not buying 100,000 contracts in ES and holding them for 30 years. That's what they do with stocks, right? That's what companies do with equities, right? They have long time horizons. This is for speculation, in, out, in, out. The major players who are in this market are speculators who are moving price around. Big orders. Big green candle, short covering. Big red candle, big sell order. I really don't want us to have a gap. I find them a pain in the butt. Let's see if we can get a gap fill off the open. That would be nice. If we do open on a gap, here's a scenario. Okay. If we open on a gap, it could go back and forth for a little while before it fills the gap. That has been known to happen because you have to build up supply over a level in order to collapse that level. But we might get lucky and come back down. We got 7 minutes before the open. We got plenty of time to take this thing under 73 if the order flow permits, right? Larger size, longer term traders, you're looking for 68.54 as I've been talking about for days now. Okay? Now let's see if there's a seller at 76. That would be handy. Let's see if we get a seller at 76. Right? And also you guys know that if you are going long, you're going to have a seller at 78.5. Right? The top of the candles are where the sellers initiate. So if the market starts lifting higher and taking out the tops of these candles, right, then you know if you're a short seller that you better start to cover. If you're short, you're looking good. If I was short, say 78, 77, I'd stack some bids down here. Say you're short 10 contracts up here, right? I'd be covering a little bit because I like to get paid. That's just me, right? I don't like being in trades and not getting paid. So I'm short 77 quarter, right? I'll take some back at 75 quarter on 10. I'll take 2, 3 back, right? Pay myself. And then I'll put bids in. Now, if those bids do not fill, what kind of practical information are you getting? You got buy orders here, right? So if you're short and those buy orders aren't getting filled, say it comes to 75 and it trades at 75 and you don't get an execution. Well, now you would because it goes to 74.5. So see how you're covering? You don't have to drag your stop. You don't have to move your stop. You can leave your stop where it is and use your buy orders to tell you whether that trade is working, right? Because if you are short 77 quarter and you cannot buy back contracts at 74, then you got to bring up your price that you're willing to pay. And that is how traders have traded for thousands of years without charts. They'll sell something short, put their stop, wherever they see the seller. Like if I was short 77, my stop would be here, right? Using the candles. And then I'd go and put buy orders in this area because I know there's going to be covering bids at that previous day high. So I'll try and front run that 77 down to 74 on 10 contracts. If you cover half of them at 75, the other half at 74, that's a nice little trade on 10 E-minis, right? 5 10 E-minis, you've paid yourself a little bit, right? You've paid yourself a little bit, and that's it. So large traders use gaps to sell into, right? Because you've created buying. You've got people short, they're holding the market up. Then the FOMO longs come in, right? It's very, very simple business, but it can get complicated if you overcomplicate it. I gotta tell you, this AI is fucking freaking crazy amazing. Look at this. Excuse my language. I put this in here, right? Because one of the biggest things I've had is, excuse my language, I have put in one of the hardest things I've ever had to teach people. And check what it spits out. Absolutely incredible. It's absolutely amazing. And for the folks at home, I'll put a link in to our AI trading coach. It's the technology, the resources we have now are just crazy. Oh, and I'll put in the link to our trading room as well. We are the tradingsyndicate.org. Webpage is just tradingsyndicate.org. And we will teach you how to make money. That's all we want to do. And we're off. Looking for a gap fill. Looking for, boom, gap is filled. Okay, that's handy. Right. Now, let's see if we can get a little lower. Right? Filled a gap, found buying, boom, straight up. Gonna get you guys. Let's see. I gotta say I'm short biased, but I'm seeing bids right now off the open. So Let's not get caught up in that. Wait for the next candle. Yeah, it's amazing. The formatting, all that stuff, Raj, is just absolutely amazing. So they stopped selling. You notice they stopped the three candles here. They stopped selling. Since I haven't really traded much this morning, I'm going to go on the micro just to make sure I'm seeing this right. I'm seeing a seller at 76, 75. So if we can get back inside yesterday's range and take out that A low, let's see. It's a bit risky. It's a bit risky right now. See, two green candles. It's going up. Let's see if there's a seller at 76. Ah, there it is. 76 and a half. Seller's right there. You see that? There. Hit it at 75. See if I can cover at 73 and a quarter on one. 73 bid for the next one. Moving up to a quarter. Oh, hit me. Flat. Okay. Once we get underneath and take out these candles here, right? There's going to be some bids at 67. If we can stay under 72, you can short this thing, and if you're still short, you can hold that short all the way down to VWAP. Bing, there you go. See, I covered too early. Right? Nice. Next stop, the close. Boom. Next stop, 62. That was a nice short. I just clipped a couple of points off of that, but that was nice. Beautiful. Right back to cost basis of yesterday. Not even time for a smoke break. It's going to take out that W low. Let's see. No, there's some buyers here, right? Right at cost basis. They stop selling. Shorts start to cover. Shorts are covering. They see sellers, they drop their bids. That stop gets taken. The next set of stops, 60 half, 60. 59 three quarters, sorry. Right? Those get taken. Lower targets, 55 half. Look below and fail of 62. You're looking for sellers between 66 and 67. Candles in 2025. I don't know, James, you seem like you're pretty happy with yourself. Well, I'm glad you're having a good time. Look below and fail, right back up to VWAP. Let's see where the sellers step in. Close to 69. Nice look below and fail of 62. Anybody capture that? Yes, no? 63 long, selling 66, 67. Nice. Hey, G-Man, how you doing? It's staying above 69.70. We're looking for 73. Nice work, Rob. Good stuff. Good stuff. Hmm. I'm going to backfill this move. See if it can hold 65 half. Nice work, Chris. Good to have you back, brother. Well done. Rotating back down to 62. Hey, I'll be happy. If it just rotates between 62 and 69 all day, I'll be happy for that. Just trade the outside in, right? So we've got a seller at 71. The candles show it very clearly. Next candle opens here, sellers under VWAP, right? So we'll be looking for a break of that 64. If we can't get a break of 64, rotation higher. And once again, as we get some liquidation, I am looking for 54 and a quarter, which happens to be our overnight low to the penny. And that level comes from this 4-hour candle chart, where we've had a seller at 68.54 for days and days and days. So let's see if on retracement if we can break 54. Okay, that'll tell us if the business has changed. Now, enough people short this thing under 69, we'll go and try and take out that seller up here. Hey, Dan, how you doing? Right, I don't like to trade in the middle around VWAP, so I'll wait for a look above, a look below and fail of 69, or a look below and fail of 62. Order flow is a little mixed right here at VWAP, so it's not clear. Oh, there's a seller at 67. See if we can clean out that seller. Now, folks who are just starting trading and who are new, just take your time and watch this. When a market opens, it's generally a little difficult to trade, right? There we go. There's that 71 seller. We're cleaning them out. The next stop will be around 75, 76. I am long 69 and a quarter, and I've got sell orders out at 72 half, 72 and a quarter. I've got 2 contracts left. I'm out one at 71 and a quarter. I got one left, and I'm flat. Yeah, why do you want to get run over at VWAP, right? You know, most retail traders, what they love to do, it's like the way they trade is in this panicked mode, right? We want to stop that from happening. There's no reason to trade like you're running through a meth lab holding a can of gas and a bunch of matches. You don't have to do business that way. You can make a bit of money here, make a little bit of money there, and you don't have to trade like your hair's on fire, right? Now, how you do that is you have a basic understanding of how business works. Most traders, you'll ask them, what's the business reason behind their trade? And they'll go, huh? Well, it's a moving average crossover. Yeah, but what does that mean? Well, it means it crossed over. Yeah, but give me the mechanical business reason why you would be putting money at risk. Crickets, right? There's got to be a business reason for why you take a trade, right? If you're short now, it's because you see sellers, right? If you were short 69, 70, right? You'd put some bids at 65, 64. And if those bids do not get filled means executed. So if I sell something short at 70 and I go to buy it back at 64 or 65, and I can't buy it back at 65, right? We'll just rotate. This business is about the rotation of inventory. Really simple. That's all it is. Order flow comes into the market makers and they transact their inventory based on the order flow they get. Very simple, right? We're looking for 68.55 half, and then we're looking for a print at 54 quarter. If you're short, you're looking, there's going to be some bids here. Now, this is where we're going to find out what's lurking here. Bids again, right? So far, we are front running 54 quarter. Let's see if they can hold that. And we're looking for, see if that low holds. A lot of good mechanical trades today, definitely. So now I'm going to let them work out this low. We do have a seller at 64. Just let it clean itself out. Take your time. Candles get a little slower. Business is slow when the candles are small. Very simple. Right. Big candle, get a big order. It's not that difficult. No reason for me to take a trade here. Right? The candles are telling me that there's no reason for me to be in a trade. That way, you don't spend a lot of money getting stopped out. You take only the trades that fit your business plan. Right? So I trade when it does this. When it doesn't do that, you're not getting my money. It doesn't get any more simple than that. Let's see if we can get any lower now. Slowly drop it in. Slowly drop it in. I fully expect 54.5 to get traded at. Here we go. Might just take a little while. Here we go. Looking for 55 half. Oh. Yeah, let's see if we get a look above and fail. If we break 68.54 and accept under 50, you can short it down to 31. Right? Just relax now and watch this. Watch how it takes care of 54. Do whatever you need to distract yourself. If you think that it won't take 54 and you want to build a long position here, you can do so and use the A low and that stop as your out. So say you want to go long and you're building a long position, right? Because you think that that low is going to hold. Watch as it comes down to 68.5, right? I would prefer it goes under 54 and comes back up. That's just me, right? But if you are trying to build a long position here and you're buying, you're buying 58, 59, 60, right? Your risk is here. 56 and a quarter. That's if you could afford to take that trade. If you can't afford to take that trade, don't do it. Right? If you can't afford the risk, do not take that trade because it can get ugly quick. That's why I would like it to go underneath the overnight low and come back up before I go long. Then I know the sell orders are cleaned out. Otherwise, you're leaving a lot to chance, and I don't like that. Right? If you're a larger trader, fine. That's great. Now, on this candle here, look for the top of the candle. I don't care what color it is. Look at the top of that candle and see where the seller is and mark it. Because if you're going long and you can't get over 59 and 3/4, you got a problem. Get it? Say you're trying to go long and this market can't crack 59 and 3/4. See how there's a seller there? It's so simple. You don't need any stupid book map, nothing. All you need is a candle chart and a little bit and two brain cells to rub together, and you can see where the sellers are, right? They've overcomplicated trading so much that it's made people completely dependent on stuff they don't need. Tag, that should break. I still wouldn't be going long unless you're really fast. I'd love a look below and fail. That would be the best of 54. We knew not to go long here, right? You guys saw that. You saw that there was a seller here, right? I hope. There's the break. Teen, is your name JJ? Teen's trying to take over my trading group. You don't worry about that. It's not relevant at all. Just focus on your setup. It's okay, brother. You just had a little too much coffee. That's all right. I know. You have good intentions. You try to help. Listen, I had to give you the gears. You could take it. Holding 51, looking for sellers at 58, right? Let's see if we can hold 54 now. So we did a look below and fail of 54 all the way up to 57. There we go. Let the large traders work this level out. If you want to go long, let the large traders work out 54 before you go long. If you are a short seller and you see a seller at 54 here, you could stay short and you could put your stop above the top of that candle there. Yeah, if you could explain to me why, if you could tell me the business reason for why that crossover works, I'm not going to poo-poo it. But if you just tell me to go buy something based on something without being able to explain it, am I really going to trust my money with your harebrained idea? Right? And not you, Mr. Simpson. I'm talking, other people. Right? So, okay, I'm logged 57 and a quarter, and I'm banging about with both hands. I got 5 left. I got 6. What do I get? I'm getting out at 60. Long 57 and a quarter on some size, not real size, baby size. I got 1 left, and I'm flat, and I'm done. That's it. A signal shift? Okay, I'll buy that for $1 if you tell me what a signal shift is. Explain it to me like I'm a golden retriever. Nice cleanup. Now do you guys see why we waited for the look below and fail of 54 and a quarter instead of trying to buy it before? Does that make sense? Okay, so if you're swing trading micros, you're going to use exactly the same thing I'm doing for scalping, but putting it on a larger time frame. So what you're going to do is you're going to be buying or selling your position, right? So if you're long, you monitor that position and you put some sell orders out because you're not swing trading 1 micro, right? You're probably swing trading 5 to 10 micros. So when you buy your position, put some sell orders out to make sure that somebody wants to buy your position. Now, contract rollover is what? Is it next week? Jeez, is it already? It is next week, isn't it? So when we roll that contract, where's that kooky thing trading? Right? So the forward contract is trading at 69.13. I don't know. I don't have EMAs on my screen, so I'm relying on you to tell me. How did I decide? I saw the bid. You got to remember, Josh, my entire 34-year career has been dependent on one thing: to find that bid and fill it before another competing seller can get to it. So when I see that bid, I can go long really quick off of it and then sell into that strength, right? It's just all it is that made me take that trade when we cracked. I saw that I saw these two big candles going up, and I was like, oh, they cleaned out the seller here at 57. So I'll buy some 57 quarter half and then throw it up here at 60. And if they take me, I'll make 2-3 points. Good enough, right? And I only need 30 seconds, 20 seconds to operate, right? I'm used to doing phone trades in 30 seconds, right? So I should be able to do at least 3 or 4 electronic trades computer mouse trades in 30 seconds because you're just clicking buttons, right? So in the old days, if you called me up and I would pick up the phone, I'd have you in one phone, my market maker on the other phone. And I'm like, hey, this is JJ from ABC. Microsoft, 1,000 for sale, 55 and a quarter. And the market maker would say, done. And I'd report that back to you, done, on the phone. But you got to be quick, right? Do I recommend any books? There's no trading book that is going to help you better than sitting and watching a market and making notes. Learning where the buying is and where the selling is and keeping it simple. The best trading books, I think, were written at least 100 years ago. I don't think there's anything that is written lately. Maybe Mark Douglas's work, but he doesn't tell you where to take the trade, where to put the stop. Right? Your best use of energy is looking at a 1-minute chart, putting the bid-ask indicator on it, and watching where sellers sell and initiate where they stop selling. That will tell you more as a trader than any other information that you can look at. Right? We have the AI trading coach, which is a great source of information and can do so much for you. But the one thing that nobody can do for you is sitting and watching and learning. And if you use our AI trading coach, if you join our room, I know I'm touting the room, right? And it sounds like an ad. But come check it out and spend some time, watch the videos, ask me questions. I'm thinking tomorrow at 11 o'clock we should do a session on trade execution. Now let me ask you, see if I get any feedback from the room. You guys awake? Let me know what you think. Yeah, reminiscence of an operator is good, but you're not going to understand any of it. You'll understand, like, the more and more you go through your trading career, you'll understand it more and more. I reread it all the time, right? The very best book written on Wall Street was written in 1873 by William Worthington Fowler. Inside Life on Wall Street, written in 1873. You can Google it. Google Books has it for free. Inside Life is the best book ever written. Trading in the zone's good. It's great. I love Mark Douglas. I wish he was alive today. We'd have him on the podcast. But he's not going to tell you where to take the trade. Right? I really think the best combination, you know, is watching charts, rewinding them, right? And then the icing on the cake is RAI as a source of information that has been groomed so you're not getting stupid information like it's not talking about liquidity sweeps and it's not talking about all gaps fill and all this nonsense, right? That's, you know, yeah, Inside Life in Wall Street, because it's written in 1873, is a little hard to understand. But man, you will see very quickly how the industry has not changed at all. Right? You guys say algos and everything. Algos are just to speed up the execution. Right? Algos are just to make the delivery of the product more efficient. That's all. Right? Algos are like the robots on the floor of a factory. They're loading the truck, right? That is the it Fowler is one of the best authors out there. You know, it's just amazing how much you learn from that book. Um, written 150 years ago. If you are comfortable trading on a 5-minute chart, go ahead and use it. Hey, nice work, G-Man. Well done. Beautiful. Seller at 55 quarter. If you are comfortable using a 5-minute chart and you're making money, as Cat Williams would say, make your paper, boo-boo. Right? But if you're not consistent on a 5-minute chart, drop down to the 1-minute level and slum it with us for a little bit. We'll make you profitable, and then you can go back to 5 minutes. POC move down. Good absorption, Howard. Right? If you are profitable, right, using that 5-minute chart, just keep making your paper, baby. Just keep making it. There is no shame in your game. That's a beautiful thing. If you are not, try 1 minute. Because you know why I like the 1-minute chart? It forces us to think and react quickly. Not only just to get into trades, but to get out of bad situations. Like this chart right here is telling me there's no reason I should have been shorting 52, 54. Because look at this, right? Now we're going to backfill, so we're just kind of probably go back and forth here and see how much of that inventory drops out. Back and forth. Right? And the catcher's mitt trade is a thing. You know, you use the tool for the job, right, Mr. Simpson? So I've looked at all these other time frames, and given that most retail traders really move very slow and think very slow, the 1 minute chart is the best way for them not to lose a lot of money, right? Because in a 5 minute candle, there's so much going on in a 5 minute candle. And the 1 minute takes that 5 minute candle and opens it up. It's like when you're using a microscope and you flip the little thing to a more powerful lens so you could magnify what's going on. Josh, right now, you'll have to excuse me. After I took that last trade, I got lazy. So if we could build a position here, target is a front run of VWAP. I know that there are sellers at 60. So the only thing to do here is either trade it back and forth in the red zone or build a position and sell into strength as it pops. The catcher's mitt trade is something that Don Miller coined. What it is it's describing when you have liquidating inventory, it comes into wholesale hands. Like, you know what, a pop fly? Like when you get a pop fly, Alexander, in baseball, and the catcher goes under it, catches it, and then back up this way. So it's liquidating inventory into wholesale hands to be redistributed back into the retail flow for profit. And that's all we're doing. We're just doing this. We're selling it to you guys here. We buy it back here. We take it back up. We sell it to you guys here. We buy it back from you here. You see, it's like a used car lot. It's like the world's biggest used car lot. That's all we're doing is we're selling you the same crap over and over and over again. Right? So a lot of people say you got to correlate the ES to the NASDAQ into the moon phases and to the square root of pi divided by, some crazy number, and then you don't need all that. All you need to do is find out where they stop selling, buy a little, and when it moves up, go sell it. That's all you got to do. That's all you got to do. And you got to practice that over and over again so it becomes like breathing. You're trading your targets, you're putting in your stop. You should be able to put orders in with one eye closed. Right? If I tell you 68.52 bid, 51 stop, as soon as I said stop, you should have had the orders in. If I call out 68.52, 50 stop, your orders should be in by now. You shouldn't be fumbling around. If I call out a trade for you to take, you should be able to execute that in 10 seconds. If you're fumbling around, for the love of God, don't put money to work. Go on the sim and learn your software. This business does not reward hesitation. Hesitation kills you in this business. The reason you're hesitating is you don't know what you're doing. And that is perfectly okay. Nobody starts off in this business. Nobody leaps out of the womb and starts trading at like, have you ever seen any trading prodigies at 5 years old? No. It's not like those kids that can play, right, the Moonlight Sonata on the piano at the age of 6. You don't find that. It's a learned skill, right? So when people say be patient, what I say is be patient with yourself. Do you need to be a material? Do you need to be materialistic? No. Dear God, I know guys who are worth billions of dollars who will fight you over a $30 restaurant bill. Okay, I have a client of mine who I was with him when he made his first $400 million. And then when we went traveling, he made us stay in the cheapest, most flea bag ridden motels. This guy at the time was worth $400 million, which he did not pay tax on, by the way. Right? He drove an old car. Hey, listen, I know a trader who makes 20, 30 million or 20, $30 million a month who drives an old Toyota pickup truck. You don't have to be materialistic. You just have to be good at what you do. Right? So we're just futzing around here. That I cannot tell you, Jess. You've heard of Omerta, right? uh, yeah. That's why I don't name names. None of these guys who make billions pay tax, just so you know. So back and forth, you can see we've got that balance, and this is why I get you guys to do balance zones, balance zones, balance zones. Right? I've got to say I'm short biased. I'm short biased. They don't talk. Fred, they actually don't talk. Do you know how they do business? They have a private banker. That private banker will come visit them. And this is the creepy part. This is how the private banker will go to a hotel. You'll go up to his hotel room, have a conversation. No phones, no nothing. Nothing's written down. Business is done. I found that very weird. Clients would send me, oh, this guy's coming in from this bank in Switzerland. Go meet him. He'll have instructions for you. I'm like, huh? So I go to meet the guy, and oh yeah, like he's like, yeah, come up to my room. I'm like, I don't want to go to this guy's hotel room. So you go into the hotel room. The Swiss banker is sitting there. He gives you like 3 lines of instruction, right? You're not allowed to write it down. You better know what you're doing, otherwise you're fired. And then he kicks you out. It's very weird, right? Billionaire complained the popcorn cost $2. Yep, that's it. That's exactly what it is. Man, this guy was so cheap. Oh, it was actually beautiful how cheap he was. I have read Jim Dalton. Jim is a friend of ours, and he has been in our trading room and been on my podcast a couple of times. Confessions of a Market Maker. We love Jim. He's a great guy. Very grateful to the work Jim Dalton has done and presented us with. Exactly. Well, I'm writing a book. Hey, I think I'm almost finished the book. I don't know if it's readable though, so I'm gonna have to get an editor. I've got a couple of hundred pages done. Basically, it's all it is just me and my wacky clients. It's like a cross between the blacklist and really, it's just like the blacklist. Oh yeah, we'll have to get Googled at it. Yeah. A friend of ours, Rudy. Exactly. Thanks, Jess. I appreciate it. Well, there's an unwritten code on the street. You just don't go giving away secrets, right? Except for me, I'm the idiot who's going around telling people what to do. But really, this business is not that complicated. They've overcomplicated this so much to take people's money, right? They just keep shoving all these indicators and fancy smart guy gibberish words into you until you guys are puking. I'm hearing retail traders talk about liquidity sweeps and all sorts of crazy crap, right? And I'm like, what are you going on about? Really? You know, they love to keep people in the dark so they can steal their money. That's what my mission is. Before I leave this planet, if I can get some of the people because you got to understand, I've sold billions of dollars worth of worthless stock to people as an executing trader. My clients were the most vicious human beings on the planet. The only people that were worse than my clients are the people who work in Hollywood. Okay? But stock promoters, hedge fund guys, they are ruthless, right? And I was their executing trader. So I'm dumping all this stock into the US markets, billions of dollars of it over 30 years. I want to try and get some karma credit points. Hey, listen, if we get over 60, we're heading to VWAP. Not the greatest trade. It's a little tight right now. Okay? But if I can teach some people to make some money and improve their lives, then I might not go Top Gun straight to hell. That's what I'm trying to avoid. I'm avoiding Top Gun to hell. Otherwise, I'm going to hell Mach 6, Mach 7. I'm gone. Right? See, every time a retail trader makes money, a market maker gets his wings. It's true. Dude, stay out of trouble. Do I believe in the afterlife? Yeah, I've been dead for 4 or 5 minutes, so yeah, I do. I died in 2012 for about 4.5 minutes. So yeah, it was a trip. All right, let's see if we can get past 60. Oh, that seller's still there at 60, folks. Yeah, Dan, I used to be the Raymond Reddington of the OTC bulletin board. I was like a concierge. You need a market maker, you need a promoter, you need a lawyer, you need a transfer agent. It's been up and down, Gambit. At first there was a big one, and then I lapsed, and then I'm back on the wagon with exercise and diet. Totally, I remember everything, Rudy, like it was yesterday. Can we creep above 60? Because now what we've done, ladies and gentlemen, is we're going to take this cheap crap that these poor people puked out to us. Now we're going to go sell it back to new people. Yeah, Rudy. Yes, I remember everything. Truth be told, it was quite a pleasant experience. All right, coming up to 61 and three quarters. Well, sellers are there. See how if you mark off where the sellers are going to be, there's no surprises when you get there. See? Yeah. So that really helps. Everyone had the same idea. Nice work, Travis. Right? Sell that 61, bid at 59, 58, take a couple of points. Oh, that's heavy. Coming down to 54. Oh, back under 54. We're back to where we started, ladies and gentlemen. So we only saw that for 3 minutes, right? Can you talk about the catcher's mitt and what you were thinking inside range versus expansion range at the bottom? Could we just be clearing out sellers above to make sure? Yes, Dragon. Definitely. Right? So because we did the look below and fail of 54, that made the catcher's mitt more plausible. Right? So we did this, okay? And then you see this. That's what tells you to do that long trade up. But you got to sell into strength. Now, we've got more people trapped here. As they start to sell, let's see if we can stay underneath 50. There we go. Looking for 44 and a half. There's 44 and a half. There's that F stop. The next stop will be the E low from yesterday at 68.40. This is a big ass candles this week, eh? So, slow business, fast business. There you go, Travis. There you go. Right? And we tag that 44 half stop to the tick. Let's see if it breaks now. And we're just coming back into the cost basis of the last couple of days right here. This is good. This is good. The next target down, I'm looking at longer term. Remember how I said if we do a look above and fail of 54 on the 4-hour candle wax, right? Our first target's going to be 31, okay? For longer term traders. Break of 44, we'll be looking at 31. Just down here. Now, when we come up to 51, there should be a seller. I'd be very surprised if there's no seller here. Because if there's no seller here, that means that was just one really big sell order. Let's see if we can get past the top of that candle. I'll give you a little secret, and I hope you take my advice. Going up into Christmas time, do not underestimate this market. Don't push your luck, okay? If you make some money, like say you're up, say you've been trading for a while this morning and you're up $1,000, okay? If you lose $100, $150, for the love of God, just shut it down and walk away, okay? I mean, unless you've got, you know, you're trading with $500,000 or something like that, it's a different risk. But for our smaller traders, please keep the money that you make. Don't get cocky, right? There will be times where it'll be really slow and then it breaks and you get opportunity, and then it'll go back to being really slow again. So if you like, I had that one good trade with 6 E-minis. I'm done now, right? I've been up since 4:30 in the morning. It is now 3:30 here, my time, right? I'm getting distracted. I know I'm going to be getting slower. So now I'm just going to chill out. I got to go exercise, otherwise my girlfriend's going to kill me. Back above 54. We might go back and forth above this 54 for a while. So big sell order down. Big candles on the way up. Totally different business than this. Folks in the room, can you see that? Right? Can you see the difference between these candles and this? This two different kinds of business. So there's a trade for this, there's a tool to trade this, and there's a tool to trade this. Good. Now that you see that, that's beautiful. And the market's actually really, really helping today by making it a really good teaching market. We need the drama. Oh, man. Seriously, like all my best clients, the guys who were crazy but made me lots of money, they're all gone. That guy who used to say distribution and JJ, we need the drama. He's gone now. Uh, does the business support your setup? If it doesn't, get the hell out, Raj, right? Don't stand around in there and wait. Okay, I'm done. Thank you, everyone. Please come visit us at the Trading Syndicate. Check out our AI. Steve's always got something cooking with a deal. Thank you, folks, for being with me today. We appreciate you. If you just want to learn how to make some money and actually enjoy it a little bit, come visit us. We'll teach you how to get consistent. Thank you, everyone. Trade safe out there, and as usual, do not take candy from strange market makers. Mahalo, Seymour. Hey, Renee. Bye for now, everyone. So tomorrow, 11 o'clock in the room, let's work on some execution, right? How we can hunt some trades. Bye for now, everyone.